Next, I would like to welcome Senior Vice President at GP Bullhound, Felix Bratell, who is joined by Maxime Brousse from Selency, Jenny Kesu of Xshore, Carmen Boulet from Clarity.AI, and Cameron Stevens from Prodigy Finance, who are going to talk about how their companies are addressing environmental issues. Felix, over to you.
Thank you, Maria. I am very excited to welcome today's presenting companies. As businesses, they're all widely different and diverse, but they do have one thing in common. They're all working every day to make the world a better place. So before we get started on the presentations, just a reminder to do drop your questions in the Q&A box. We will make sure to address them in a short Q&A session after each presentation. So first, I would like to introduce you all to Maxime Brousse, co-founder of Selency. Over to you, Maxime.
Hello everyone. So my name is Maxime. I'm the co-founder of Selency, a startup based in Paris, and I'm very pleased to speak today at the Impact Day. So thanks for your welcome and thanks GP. I'll be short. You can go to the next slide. So Selency is actually the leading digital brand for second-hand home decor. Basically, we are a marketplace that connects people in the home decor space. And I like to say that Selency is probably the best place to buy and sell pre-loved furniture, or we try to do. Our team works every day for that great mission, make unique, curated and sustainable home decor affordable for everyone to feel better at home. So how to do that? Actually, we want to offer the largest catalog from 10 euros to 10,000 euros or more, but with the promise to display the best of secondhand. So actually, we curate every item. Every day on Selency, we list more than 1,000 new unique items on the platform. And last but not least, our challenge is to build the most convenient platform for sellers and buyers to have the best experience in the home decor space. So actually, we invest a lot in logistics, payment, negotiation, and many other features. And that's definitely a big difference with a classified platform. Maybe we can move to the next slide. So I can highlight a few KPIs to explain more about where we are now. So we built the company 6 years ago with my co-founder Charlotte. We achieved 3 million euro monthly GMV. And 60% of the sourcing comes from the professional sellers. So our professional sellers are antique dealers or home decor shop that we help to digitalize. And 40% of our sourcing and so the GMV comes from the individual seller. So this is the C2C business. We are growing quite fast. We grew by more than 90% last year. And our community is well engaged. Let's say that more than 30% of our customers become repeaters in the first year. So that's quite good for the industry. And we are very proud of our team. 50 very talented people joined this adventure, and you know that that's key in our development. Now we have a significant traffic on the marketplace, like 2.5 million visits per month, with a strong brand effect, as a large majority actually of our traffic comes from the free channels, thanks to our brand notoriety. So, but mainly in France, because today 80% of the business is still in France. Maybe a last slide. Thanks a lot. So a last slide to talk about our positive impact on the planet, as this is our focus today. You've understood that we really want to combine aesthetics and sustainability. That's our challenge actually. And in our industry, we think this is not a choice. As a customer, we we always want a beautiful and unique item for our living room, but now more than ever, that's also very important to buy a sustainable item. Our ambition for the company is to be neutral carbon in less than 2 years. So this is a challenge we fixed with the team. First, selling second-hand item compared to a new one is a great step. We save 80% of carbon emission, giving a new life to a furniture. But we need to go further, making a lot of initiative in-house. And the shipping, for example, is one of our focus for the year, launching, for example, carpooling shipping solutions, or pushing the local business with the pickup, so the customer pick the product at the seller place. And I like the sentence from B Corp, and at Selency we would like to have this ambition. Like we don't want to become the best furniture company in the world, but we want to become the best furniture company for the world. And I like this ambitions for the company. Thank you, and feel free if you have any question.
Thank you so much, Maxime. That's a great tagline, by the way. So an inspiring story. So moving on to Q&A, let's start with this one. So how do you see that the market for used furniture and home decor has evolved as a result of COVID, both in the short term, but also in the long term?
Yeah, actually, the COVID boosted a lot the second-hand industry, and we see a big evolution on the last 2 years, let's say. Like 2 years ago, our customers want to buy a second-hand because it was cheaper. That was the main reason. And now, what we see with our customers, that the first reason is not the price. This is just because the impact and the ecological, the ecological point of the customer. So it changed a lot, and definitely we can see that on the last 12 months, the second-hand market moved a lot with platform like Vinted or other ones, and that's of course it helps a lot the business, and that's great for the global industry, I think.
Thank you. Yeah, I can imagine that's very helpful. Another one here. So how do you think the way that we buy furniture will change in the next 20 years and actually also in the next 50 years? What are you seeing for the future?
Our vision and what we see is that, like a decade ago, when you buy an apartment, you bought some furniture, and finally at the end of your life, it was the same apartment with the same furniture. And what we think is that it's changing a lot, and now we want to move your decoration as you're now more and more at home, and with platform. With convenient platform, it's now easy to sell your item. It's now much easier to sell your furniture and home decor items. So it's much easier to change your home decor, and we think that it will go fast on this way in the next few years.
Thank you so much, Maxime, for coming here and presenting. And congratulations to having built such a great business together with your co-founder, Charlotte.
Thank you, Felix, for your welcome.
Moving on to our next presenter, I would like to welcome Jenny Kesu, the CEO of Xshore. Xshore, based in Sweden, designs and builds boats that are fully electric, and they have been called the Tesla of the sea. I leave over to you, Jenny.
Thank you, Felix. Pleasure to be here today. So will you be able to get my presentation up and running, Felix? Thank you. So as you can see, Xshore was built on 3 pillars: design, technology, and sustainability. And hopefully I will be able to show you a video now that will show you more of our products. I think if you just flip to the next slide, Felix, it should start automatically.
Yep, coming up now.
Thanks.
In the land of the brave, in our fearless state, there's a wild heart running away. I let my ship drift, I can navigate within. There's a place where dreamers collide. You guide me home. Dawn is breaking. The night is taking me home. Can you guide me home?
Okay, so that's our boats, and that's what we do. So we are, Xshore is the first mover and hence leading the field of electrical boating. And this is a sector that is growing rapidly as we speak. Last year, we got our product CE certified as the first electric boat ever to have high performance and also get CE certified. So having high performance entails that our boat can be compared to a traditional combustion engine boat. So it can go both fast and far. Otherwise, typically electrical boats are nice, but they are also slow. They go slow and far. So we cracked that code and hence leading this field. We have a lot of proprietary technology. I'll get back to that. But most importantly, that opens up the market quite a bit for us. So we have B2C, obviously, lots of customers buying our boats. We have delivered boats now to 3 continents, Europe, US, and the Middle East. And our software, we have lots of software also targeting B2B and B2G, so business to government. So we have smart cities as clients, we have hotels and resorts as well. And our products are designed for manufacture. So everything is modular, and hence we scale very quickly. If we flip to the next slide, you can see that outstanding performance and speed, very much like a traditional combustion engines. You can go at least marching speed of 25 knots for a couple of hours, which is fairly new with electrical boats. If you go at slower speeds, you can go on for 20 hours. So it all depends on how fast you're going. Unique and modular design, everything can be changed. That goes for the interior design on the boats, it goes for the batteries, etc. And everything comes down to sustainability. So our boats are, first of all, they're built not to harm the environment in any way, no emissions, they do not disturb sea life, neither below or above the surface. So that's one part of sustainability for us. The other one is the materials we build the boats from. So we also build the boats out of flax. Flax is it's more like flax fibers that you can have in your clothes, so sustainable from that perspective. Any distance materials we're using is PET, so recycled bottles, and also we build the boats in a non-traditional way, entailing that we don't emit any chemicals or harmful substances. The big USP with an electric boat is that it's noiseless. It doesn't emit any fumes, so it's amazing experience also from the perspective of the torque. It goes very fast, pretty much like driving a Tesla for the first time. We have proprietary software, as I mentioned, and since the boat is connected at all times, we download 150 data points per second and can always optimize it. We can track it wherever it is via the alarm. We can start and stop the boat with the watch, which also, if I fall into the water, the boat can feel that I'm no longer on board and it stops, etc. On the next slide, you can see that our current model that we're selling now is often compared to Tesla Model S. We will fairly soon come out with a cabin boat that will be the first electrical cabin boat ever. That is slightly more complex, slightly larger. It will be more like a Model X, and in a year, just over a year, we will come out with more like a Model 3, which would be something that would be affordable premium. So hopefully we will see that as a blockbuster comparable to Tesla's Model 3. On the next slide, I put a few things on the software, which is everything from embedded to campus to NME at 2000 system. Everything loads up on the web. If you're a private individual, you will use our connected boat platform to control everything. And if you're a B2B or B2G client, then you have a fleet of vessels, you use our boating control tower. So the software is really the secret sauce. So we're a technology company in the leisure boating industry. And that was basically what I was planning to say, Felix. If you want to flip to the next slide, that concludes my presentation. Happy to take any questions.
Thank you so much, Jenny, for sharing this amazing story with us. I'm probably not the only one on this call longing for a boat ride in the summer sun.
You're more than
after
welcome.
seeing that video. Might take you up on that. So one question for you. And hopefully this is a question you can answer. And since you've been with the company for some time, like when you went from idea stage to prototype, and from prototype to commercial product you can buy now, what was the most difficult element of building an electric boat?
So it's really getting the software right. It's basically cracking a code. So for the first 3 years, it was the founder, Konrad Bergström, who was building prototypes with external engineers. And then when you when we cracked the code, as to say how to go fast and far and to make everything modular, scalable, that was sort of, so I would say when we managed to get the software right. So you can buy all the hardware products basically that you're seeing in the boat, but it's very tricky to get them to work together and get the boat to go both fast and far. So, and we cracked that code just over a year ago when I joined, and since we've been scaling.
It's great. How many deliveries do you have to date?
Let's see, we've delivered boats to the US, to the Middle East, and to Europe now. We have more demand than we can supply, unfortunately, so we're about to build our second factory. So today, we've sold much more than we can deliver. I'm happy to say that we'll be contracting on our second factory end of March, so hopefully we should be able to get all the sales out later this year, but that's a quite hefty number actually. I don't want to disclose it, but it's substantial.
I think there's a lot of questions here, but a final one. So autonomous driving, can it park itself, or when does that come?
Personally, I don't believe in autonomous driving on boats, because typically people want to drive their boats. That's the reason why you buy it. It's not like with cars. However, we will have assisted docking, because that is a threshold for many. So you like driving it, but then you get closer to the harbor or the jetty, and then you prefer to hand it over to someone who typically docks it. So we will have auto docking later this year.
Very nice. Thank you so much, Jenny.
And I love answer questions about this company. So anyone is more than willing to contact you, Felix, and you'll put them through to me.
For sure, will do.
Good. Thank you.
Thank you. So over to our next guest. We would like to welcome Carmen Boulet, Head of Partnerships, Branding and Marketing at Clarity.AI.
Hi everyone, thank you so much for inviting us. So let me first brief introduction about Clarity. We are a tech company. It was founded 2017. by Rebecca Minguela, Spanish entrepreneur in New York, and now have 3 offices, also UK and Spain, beyond the US, and more than 100 employees. So what we do is provide software as a service for investors to measure impact. So sustainability and impact. So basically very aligned to what the whole discussion today around impact and sustainable investment. So if we go to the next slide, a bit of context on the market. As we all know, it's a huge growing market. And there's more and more assets under management that include the label, the sustainability characteristics, so to say. But there's really many, when we speak about sustainability, there's many different definitions to it. So some people are thinking, and we're discussing before, we're thinking about exclusion, so excluding companies that have a negative impact or exposure to certain topics. There's ESG, which is a risk kind of management angle, and there's also impact investment, that has usually been more linked to the private market sector. So how we see it at Clarity is not only as what our vision is in bringing impact to market, is that when any investor makes a decision, it's not only about return and risk, but it's also about the impact that a given company has. So as you were saying before, anyone can have an impact. There can be companies with a social mission, but we believe that the whole market, the 80 trillion assets under management, could be eventually could be managed with an additional dimension, which is the impact on people on the planet. So really, this is kind of our approach and where we want to, how we want to contribute it. So beyond the definitions, if we move to the next slide, we work with many types of investors. So from asset managers, or institutional investors and asset owners, and also the wealth management sector, and some common challenges that are in the market are around one. I've already mentioned, that not having a standard definition of what sustainability means. Also on the data side, it's very fragmented, the sustainability data. Sometimes it's not even there, or it's not reliable, and also the tools of making this as scalable in an efficient way, so to say. So if we move to the next slide, just wanted to highlight a bit on the value proposition of Clarity, of how we're trying to address, how we're addressing each one of these challenges in the market. So Clarity, at Clarity, we've developed an AI, so artificial intelligence powered tech platform, to cover all investor sustainability needs. It would be kind of the Intel Inside concept, meaning it's the engine for anything that you want to do in that area. So on the data side, we built, going across each one of the pillars. On the data side, we've built one of the largest sustainability databases. We're assessing now over 30,000 companies and more than 200,000 funds in terms of sustainability. And how we do that in a scalable way, it's really through data science and technology. So it's not only about we aggregate different data sources. We have many different partnerships, but it's also about getting the reliability, the quality of the data right. So we're running reliability algorithms. We are actually estimating, we're trying to fill in the gaps wherever companies are not reporting on a given data point. And even we're complementing the company reported data with outside in data. So we have partnerships with Factiva Dow Jones, with Thomson Reuters, with many news outlets, to actually understand and detect incidents related to sustainability. And that's how we get to one of the broadest and more reliable databases out there. So then what's more important is what to do with that data, right? So what insights you get from the data. And as I was introducing before, there's many angles to sustainability. So the most used today is for example ESG, which we are all very familiar, and it's a measure of risk. How does sustainability affect a company's value creation? But we have in the tool, we have also included an impact view, such as what's the contribution of companies to the UN SDGs, or what are the alignments, like the climate impact in terms of a 2-degree scenario, and many more. And what we do with those scores, we also allow investors to customize the methodologies. They might have their own views, their personal values, their risk assessments, so they can go into the tool and customize them. And everything that we provide in there is transparent, from the methodology to the data point to the data source. And then how this all fits into the tool itself, right? How can this information be used and be useful to investors? We have the web app product, a web application, which it's a fully fledged kind of functionality around portfolio analysis, reporting, and rebalancing, but we also integrate with many platforms through widgets and APIs. If you move to the next slide, so on the what we've achieved today, there's many, so again, this is a kind of an ecosystem play, but really, so in the 4 years that the company, since it was founded, the first 2 years were about product development, and we only launched the project 2 years ago. And now we have a client network with over 10 trillion assets under management. Some investors that have, recent announcements have been, for example, BlackRock, the largest asset manager, has a minority stake in Clarity, and is also integrating our insights, our sustainability insights, into their platforms. And we're also backed up by Deutsche Börse and Contigo, and are integrated in many distribution platforms, such as Allfunds, which is as you know, one of the largest fund distribution networks out there. And just to finalize, if we go to the next slide, as I was saying, so it's really, so we see this not only, we've started with investors and providing tools for investors, but our vision going forward, it's broader than that. So we're already working with corporates by giving them access to our tool and insights for free, so they can actually identify areas of improvement and benchmark themselves versus others. And we'll also be working with government regulators, consumers, so it's a whole ecosystem, included impact into their decision making. So that's Clarity. Happy to take any questions if you have them.
Thank you so much, Carmen. I think what's really great about Clarity is that one of the parts of impact investing that is so difficult is that it's difficult to standardize. And I think it's so great that your platform helps people get insight and able to standardize the KPIs related to impact investing. So that's fantastic. On to questions here from the audience. So being a company in the ESG industry that is as successful as you are, building a strong company culture is of course very important. How do you build and nurture a company culture at Clarity?
So actually, it starts from the top, I would say. So, and I'm speaking here so I'm leading marketing and branding, but basically I would say the culture starts with, so we not only say what our culture is, but really live the culture. So you will see our founder, Rebecca Minghella, living the culture herself. So every example, so part of our culture, for example, is transparency. So everything that we do, it's transparent to all the employees. Being fact-based, it's another part of the culture. So it's also everything that we do, we have the facts beyond all the discussions of the decisions. So I would say it's really transmitting that culture by doing it from the top level. So not only the founder and the management team, so that it permeates the rest of the company. but it is a challenge. I agree, especially with a fast-growing company, and moving from when I joined back at the time 2 years ago, it was 30, now 100, and having plans of growing heavily in the next year. So it's a challenge.
And we have a lot of investors in this call who I think are getting very interested in Clarity. So I need to ask how, what's the, because I think you mentioned you sell this on a SaaS model. So what's your ARR currently, and how big do you want to get?
So we're not disclosing any ARR, but just to say, so as I was saying, the product was launched into market only 2 years ago, and growth has been tremendous. So we have client investors all around the world. So mostly our focus, and as you know, demand its largest in Europe, but as you see, BlackRock and many others, we also work with US firms, and it's all across, right? So it's so right now we started our focus with asset management and asset owners, and more we see this demand going downstream to the wealth management and even individual sector. So there's more and more increased awareness on sustainability and how to include that in an easy way into investment decisions.
Final question. How do you know that the data that you collect is accurate?
So we invest a lot in that. So part of our team of the 100 people, more than 100 people we are, I would say that 80% are data science, research, and tech team. And actually being aware of the lack of quality, we have built these algorithms that actually choose the most reliable data point for each company. So we go at the company level, look at the 200 metrics, compare between different providers, and assess based on different characteristics, but which one is the most reliable. So that's one part, the AI part of it. The second one is that as we build our, as we engage with companies directly, we are actually validating that data and getting feedback directly from the market. So we actually are allowing companies to, and we're seeing very good results there. So really less than 5% error rates where companies themselves validate the data and give it directly to us, right? So it's kind of a two-modal approach, getting all the data points together and running AI reliability algorithms, and then investing in the relationship with the companies.
Thank you so much, Carmen, for coming.
Thank you.
Moving on to the next presenter, I'd like to turn it over to Cameron Stevens from Prodigy Finance. Prodigy Finance is a fintech platform that provides financing for international students so they can pursue their education dreams. Cameron is also a close friend of the firm. Over to you, Cameron.
Brilliant. Thanks, Felix. Hello, everyone. It's great to have you on Zoom. I'm sure, like me, you're spending most of your day on it. So I will keep it as brief as I can. I don't have very nice music backtrack with boats in this Swedish archipelago, unfortunately for you, but I'll try and do my best. So I started Prodigy more than a decade ago now, and it was a really personal journey for me. I'm South African. I got an admit decision to attend INSEAD in France and Singapore, and I couldn't afford to pay for it at the time. And I tried to get a loan from HSBC at the time, and they said to me, "Sure, we can give you a loan, but you just have to put up the cash, and we'll lend you back 75% of it." And I said, I'm not sure you exactly understand how this whole business should work, but it's definitely not that. I had to decline my place at INSEAD. And luckily for me, the startup I was working on at the time, we had an exit, and I could apply again and afford to go the next year on my own steam. But what I realized was two things. One, an enormous group of people, particularly in emerging markets, were excluded from the benefits of a top-tier education because of funding availability. And two, that this was going to be a very difficult problem for the existing incumbents, the banks to solve. So if you're a kid from Ghana or Indonesia or Chile, or pick your country, you've been accepted into Stanford or Oxford, or pick your top university, you really have no options to be able to fund it, because either your home country bank requires a massive guarantee from your parents or from someone else, or requires you to have income or assets. The country of study where you're going to requires you to have a co-signer, or to have a credit record there. And what it means is, if you just go to the next slide, Felix, so what it means is, for people like me and the 5 million people like me and like Ruhi, who we funded at Wharton, really without our funding, there's no other opportunity to go. So also sort of next slide, please. We spent the better part of a decade thinking about initially this problem, and saying, how do we enable these amazingly high potential people from around the world to fulfill their potential through education, because we believe fundamentally education has transformative power, and how do we enable that in a way that's going to be effective, and how do we solve the many challenges that the existing banks would have in this, about how do you assess someone's risk who's coming from an emerging market from which the credit data is not accessible and not homogeneous? How do you think about predicting their future earnings potential? Because it's not about what they're earning now in Ghana or in Indonesia. It's about what they will be earning once they've graduated from an amazing university, with a great degree. So how do you base your decision on their future potential rather than their current income or assets? And then how do you think about, really on a global scale, because all of the banks are completely fixated on a very localized industry. All credit operates very nationalistically. How do you then think about just operational infrastructure on a global basis? So someone moves back to their home country, and for our students, 86% of them return to their home country, over time after graduating, bringing back skills and bringing back global networks, which we also like. But how do you think about making monthly repayments? How do you think about payment infrastructure globally? And then how do you think about enforceability of contract, legal, regulatory, etc.? So we spent, as I said, about a decade, solving this. If you just go to the next slide. So far to date, we've originated about $1.2 billion of loans through our platform to fund about 22,000 students from about 140 countries. The vast majority of those are from emerging markets. And we've managed to show both that we can identify these incredible high potential people, and that we can show lifetime loss rates that are comparable to their domestic counterparts if you're thinking about the US or the UK market. So we have a lifetime loss rate of about 3.45%. That's on a weighted average life of about 4 years. So basically a loss rate of less than 1% a year, which is great. How that has been funded over time. When we started, we were fully crowdfunded to the alumni network of the universities. So the idea was you're really sort of paying it forward and thinking about making an investment in the next generation who's coming after you, and offering a great yield to those alumni investors, and also the ability to have a social return against what you're doing in funding this group of people. So we would offer a return to those investors on our platform of about 5%, funding this group of students. In many cases, it was people that graduated from a specific university, Oxford or INSEAD, or pick your university, funding a class of students at that school. We introduced an innovation at sort of a very a listed bond that we could fund a particular class of students. So you would be exposed only to that class of students. You would see who you were funding, and you'd see the return profile of that. We were facing huge demand issues. Our issue was always we had more demand than we could meet, and we needed to scale up the funding further. And we did a partnership with Credit Suisse's impact investing team in Zurich to distribute to their private client base. This was when we had enough data to show the model was working. And they distributed to their family office, entrepreneur, and other impact-focused investors that were also looking for a yield on the platform. And subsequent to that, we raised a a significant amount of funding from more traditional financial institutions like Goldman Sachs and M&G and HSBC, who wouldn't lend to me, but will lend to thousands of me through our platform. And then most recently in 2020, in the midst of deep, dark COVID, which was an incredibly tough year on multiple fronts, we were looking to do what would be for us in 2020, our debut securitization. This would be a first. No one had done what we'd done at scale before, and getting a rating in the securitization against that would completely change the game for us against our sources of capital and how we could scale that. 2020 and COVID entered and put a lot of spanners into the works against that. And we had to delay a lot of those plans. We closed in the midst of 2020 a $300 million facility with the development finance arm of the US government, the USDFC, and we in discussions with a number of other DFIs and development finance institutions for further funding going forward. Just a quick look at who we fund on the next slide. And really, this is sort of a typical customer for us. It's someone mostly we fund exclusively currently postgraduate degrees. It's someone who's about 29, coming from an emerging market, going to study. We initially focused on business, 10 years ago. We've expanded that out significantly into all of the sort of STEM subjects, your master's in engineering, your master's in computer science, etc. We do public policy at the top schools, and we do law at the top schools. And it's someone who will go on to study at one of these universities, and I'll describe a little bit about what they do after that in a second. But what I think is interesting in the space for me, aside from what we fund right now, and really our priority right now is doing more of what we do across more people. But what I'm very interested in the next 5 years is a couple of things. One is 750 million people are going to enter the middle class in emerging markets and be educated in tertiary education for the first time ever in their families. Secondly, education is globalizing, and you're able to deliver education to a much more global base of people and much more online. And thirdly, you're able to integrate people into a global workforce much more easily. Simply put, that kid in Kenya who could do a data analytics course from MIT online, which is credentialed, and then graduate still from Nairobi and go to work for Facebook remotely, we see how that will have the potential to unlock a whole new generation of people in emerging markets. And we very much have our eye on understanding how we are going to play a key role in that. Because if you think about how that's enabled, the cost of that is much lower for the student, which is great, but still a $10,000, $15,000 tuition is way out of reach for someone in that situation, even though the return on investment for them is going to be phenomenal. So we're going to play a key role in how to enable that over the next sort of 5-10 years. And I think funding that sort of next generation. Just very lastly, how we think about the impact of what we do, aside from the ability to offer a great yield on the next slide, is we fund people. 89% of them have no other options aside from Prodigy. They wouldn't be able to study without us. The vast majority are coming from emerging markets, and they also return home to their home countries within a period. Many will do a couple of years in the country they study in. Currently, about 16% of them start companies in their home country or in their host country and create jobs through that. And we'd love to see that increase over time. Just sort of one final note on us, and particularly thinking about impact, our chair is Dr. Judith Rodin. So she actually was part of the group as the CEO of Rockefeller Foundation that really sort of pioneered the field of impact investing and the measurement of impact investing, and invested at Rockefeller about $80 million into how to measure, quantify impact, and think about it. She was really sort of one of the founders of that. And as our chair, it's a fantastic knowledge base for us to continue to think about how we pioneer in both being a fintech company, but one which has a very strong mission for us and the ability to think a little bit more quantitatively around impact. Thank you.
Thank you so much, Cameron, for telling your story. One thing that I was wondering, have you ever hired someone whom you previously financed through the studies?
we have. It was a bit of a running joke at some point in which at some point it seemed, and actually we were looking at a role recently, and we were thinking like, this is exactly the pool, and we were thinking of going out exclusively to our alumni customer base. We've hired about 6 people that we've funded ourselves over time, and none of them were in payment difficulty. So it wasn't to try to disguise the numbers on that. It was great people that joined our team. But it's a great point, because actually another point about this is, and this is something that we've thought about but haven't done much in yet, is it's an amazing group of talent and potential. And if you are thinking about, as Google, and you're thinking about growing out your West Africa team or your Chilean team, we have all of the engineers, we have business law, etc., and we have a great pool of talent. And how do we think about doing something which is helpful for our customers in furthering employment against that, but also recognizing it's a great base of people.
No, exactly. And I mean, not least now with COVID and remote work, that talent pool becomes more accessible as well for Western companies. So Cameron, you, for all the entrepreneurs here on the call, you have managed to raise a lot of money to finance Prodigy Finance, and some of that has been debt. But on the equity side, what would your best piece of advice be for someone maybe raising their seed round or their Series A round?
I found, so our initial round was from angel investors, which I found to be a fantastic base. I mean, these were quite high profile / entrepreneurs themselves who'd been through, a multi-billion-dollar journey, and it's not always easy to get to them, obviously. But I found that to be a very, very supportive and helpful base at seed stage, and even if they're big enough themselves as investors in sort of even Series A. And I thought it gave us a lot of good grounding before taking on some VC, which we did later as well. So for me, I think aligned, ultra high net worth and high net worth investors that believe in the mission of what you're doing and that are along for the journey, I think are fantastic as a starting point. Before you sort of, whether it's graduate or continue on to more sort of funds and VCs down the line. And I think that would be my first point of call. It's not always easy to reach, and I think it requires to speak to other founders and other people in similar sectors that have been funded, but or possibly GP Bullhound. But that would be my advice.
Thank you so much, Cameron. So we're running a bit short of time here in the company presentation, so we have to draw the line there. Before we go to the next topic, we would love to put you in contact with any of our presenters for any further questions. So please reach out to the GP Bullhound team, and would love to facilitate that. With that, I leave over to you, Maria.
Thank you very much, Felix.